Hello traders, hello everyone. Welcome in the advanced room here at Life Education with XM, and welcome also on XM's YouTube where we are simulcasting. We're gonna have this session about market trading, news events, and strategies. We're gonna have a look at the market this very important week. Actually, it's pretty much the last week of serious trading and serious liquidity this year. We're gonna have, of course, 2 more years, but they're gonna be mostly holiday season for many countries. So many countries involved in trading heavily. So yeah, the liquidity gonna probably calm down. The holiday period is also interesting by itself. Oftentimes we are seeing that end of year and beginning of year volatility, which is liquidity and volatility are two different animals. Okay, so if you have low liquidity, you can have low volatility because not much trading going to be happening because big money and usually traders don't like low liquidity, and they trade slowly and gradually when liquidity is low. But also if there is like any forced repricing, any forced push, for example, some event happens or somebody needs to quickly outscale from their position or scale in, which could be like end of year situation, outscaling, beginning of year situation, going in or scaling in. That may induce moves because low liquidity will not soak in new orders so well, right? So this is very important to understand. Low liquidity may mean low volatility if traders, market participants don't want to trade too much, and they don't feel urgency to trade. But low liquidity may also mean high volatility when they feel like they have to trade, but there is no counterparty easily available on the market. Then prices start going, more in order to for all those aggressively trading people to find counterparties. So this is important. That low liquidity doesn't mean low price movements, not necessarily. Okay. Oftentimes, like end of the year, you can check on charts. For example, especially weekly charts will show it quite nicely. Last week of December, first week of January, it is quite interesting period. Doesn't really mean that it's gonna be predictable or in any way of sort. So might be that if you take position on last week or first week of the year, that you're gonna know what's gonna happen, or that the market gonna follow your signals, that the market gonna follow your way of thinking. That's not necessarily happening here. Last week of December last year was actually 1.2%, almost 1.3% appreciation against the dropping market, right? So the trend from last 2 months of the year was down, and the last week of the year was kind of pulling back. Here you had pretty volatile first week of January in 2023, right? So it went up 1%, and then it went down 2% from almost 2% from being up earlier. That's USD CAD, but we may use it as an example. Last week of December, minus 2% in 2022. Is it? No, minus 1.8. Okay, this is quite a lot for currencies. Okay, I know stock traders might be like, oh, it is. What's 2%? Okay, for stock trader who's having 5 or 10% of a stock as a stop loss and is aiming at a breakout of like 20-30% appreciation, this is not much, but for Forex, I mean, Forex is usually single-digit percentages throughout the year. First week of January, here, 2018, actually that was pretty difficult. Again, 2 months, last 2 months of year going up. Last week going down 2.2%. First week of January going down further 1.5%, right? So total move of 2 weeks, like 3.5. And sometimes January flows are front running the market. Here continuation actually, first week of January 2016. I'm sorry. First week of 2016, going up 2.7%, then 5%. We can check the same on dollar index on or Euro USD. We can go weekly. And we can check like last week of December, and first week of January is actually more interesting even, okay? Because if you think about it, the very holiday period, okay, like really nobody or barely anybody wants to trade then. Even atheists are treating it as a holiday period in a sense that okay, they might not be going through all the ceremonies, but they are like, okay, so it's gonna be slower, and so we're gonna use this time to chill and get rest, right? Everybody needs to recharge batteries. So but around the new year, I mean, it's sort of like it's not so festive anymore, right? Of course, some people like to celebrate the new year, like many people. Um, but then you come back to work 2nd January, and already everybody's like, okay, so how do we start? Let's get back to work, right? Um, and that could be also like 30th of December. That's the same. Anyways, first week of January, potentially more action packed. Um, in general. Yeah, but okay, this week, let's focus on this week. This week is actually quite action packed as well, potentially, because we are having tomorrow FOMC meeting. Today we are having, I think, retail sales. Let me double. I need to open the calendar. Let me double check on that. So yesterday we've been seeing PMIs. PMIs from Europe have been bad, and they have been bad because 41, everything below 50 is worse than previous month. And so France, Germany seen their manufacturing down again, right? So it's not like it's not just it's not just that they've been worse than previously, or they've been worse than expected, because, for example, French services PMI has been better than expected, and calendar has it green. Typically, that's the standard way calendars are going, but it's below 50, means it's still declining in sentiment. That's the same about Germany. What Eurozone manufacturing 45, for example, right? But US had it much better. In US manufacturing PMI also not so great, 48, but this is not the trend, right? Like previous month was almost 50. So Europe is seeing this decline in manufacturing very, very visible, in a sense. Yeah, probably China is like weaker exports, weaker Germany, expensive energy, right? There are multiple reasons why this is happening and why US is doing better. If we look at UK manufacturing PMI, is also not so well, but it's not 40, it's not 41.9 like in France, or 42.5 like in Germany. UK has it more like 40, has it 47, right? So It's deteriorating, but slowly, not so fast. So now we are today, yeah, we are going to see CPI from Canada, which is struggling with inflation getting lower. If we are looking at year-over-year inflation, then of course it's not so bad. It's still above 2%, most likely. Although common CPI, right, is expected at 2.1, so it's one tick above 2%. The thing is that if you look at year over year, first, like earlier months, because it's 12 months, it's like calculated from 12 months before. So what happened in between now and 12 months before could be actually unevenly distributed, right? So for example, you might have had high inflation in the earlier months of this 12-month period, and more recent months can be disinflationary, right? So the tendency might be going down, or tendency might be going up, and you will see the 2.1% print. So 2.1%, I mean, it's important what is inside, how the tendencies are going, and current tendencies doesn't seem very great. You read tendencies, well, you can look at the trend, of course, of yearly CPI, because this month 12 months will be 1 month forward from last 12-month read. So if you see it declining bit by bit, it is because the tendency is going down inside, right, in monthly readings. But it's always good to look at monthly readings, how negative they are in this situation. And of course, retail sales from United States. What else do we have? Is of course FOMC tomorrow. Everybody waiting for FOMC. The market is preparing for FOMC. The thing is, first of all, expectations are fairly well anchored. Pretty much the pricing is pretty much all in. Maybe it's a wrong word to use. Pretty much confident in 25 basis points rate cut. I'm seeing Joseph Ngugi in the chat. Hello, Joseph. Thank you for joining us, of course. You are joining us from YouTube. So yeah, in a moment we will be going to the XM website exclusively. So the simulcast on YouTube is limited in time, but feel free to follow us through the link in the description. And yeah, I hope to see you on our stream. By the way, I'm having chat here as well. Chat from our stream. We have chat on the stream as well, so guys, feel free to come from YouTube and join us here. Let's have a conversation. Like, feel free to tell me, tell us how you are doing, how is it going in your trading, ideas, questions, anything is welcome. Conversation is more than welcome, of course. So I'm looking forward to your comments. Always when we have conversations with the chat, it works really well. Mohammed also with us. Will yen continue to fall against the USD? Asks Mohammed. First of all, guys, it is very important to say that there is certain framework how you analyze the market, but it doesn't mean it's you can produce predictions, right? So I can't produce predictions. That's why I have to speculate also about the market. I can narrow down my choices to certain scenarios. So we can have a look at dollar yen. We can think about chances. And what is very important to mention, that when we are having like FOMC and then we are going to have BOJ after FOMC, right? So you're gonna have US session tomorrow, and second half of US session gonna have FOMC statement and press conference, and BOJ meeting overnight after that will be in the Asian session, during Asian session, usually late Asian session. They don't give exact hour, but usually it's late Asian session. It's like 6 a.m. continental time in Europe then, right? So it's like 5 a.m. London time. Some were around that time. Then there are going comments. So it's like for 1 or 1.5 hours. So yeah, it's like 6 to 7 a.m. to 8 a.m.